Let's talk about cash out loans, home equity loans. Let's talk about the different ways and different reasons for taking a home equity loan. So home equity is, well, first of all, a refinance. Let's just start at the very, very top. To do a refinance, right, means you're doing a refinance on a home. You're getting a new mortgage. It's going to be great. Everybody's going to love it. Everybody's going to be happy. But a refinance is the big picture. You can then go to two buckets. You either get to go to a rate and term where you're doing something that like changes the rate and the term, but that's the intent and the purpose. Or you can do what's called a cash out or a home equity loan, right? You're tapping into your home equity. And technically you can do some others there, but those are the two predominantly big buckets. You either just do a normal, air quotes, normal rate and term refi, or you may be looking to do a cash out. So there's a whole nother link and section about rate and term refinances, different options underneath that. So let's talk about this home equity bucket or a cash out bucket. So we're going to talk about the reasons, and then we'll put a separate video about whether to do a first lien or second lien, but the reasons for the home equities, right? There's reasons why somebody might say, well, what's a home equity, what's not? So in Texas, just so you know, home equity loans get dubbed as A6 loans. So we'll put a link down below. Texas is unlike any other state. It's 1 out of 50 that does it this way. So check out the A6. We'll put a link down below that tells you more details about what you need to know to do that. But that's what they call their home equity loans. So check that out because there's certain little nuances about what to do for disclosures and how and what you can do. But in general, we're going to stick to home equities as a whole on this. So what are the reasons people do, or what qualifies as a home equity? What do people do with a home equity loan? A lot of times, and probably the most obvious, is people just take cash out of their home, but they can use it for different needs, right? Whether they want to use it to pay off bad debt, like credit card debt, pay off debt like car loans or student loans, or just debt consolidation in general. That is obviously a very major and predominant reason why people take cash out, is they want to pay off some debts. And whether that means just simplifying their life to get it all under, one mortgage payment, whether that means paying off interest that's 18 and 22% on a credit card, whether that's creating some cash flow because maybe they take cash out and they pay off two cars, for 80 grand balances on each one, so 160 grand, pay off the cars, but they save hundreds if not thousands of dollars because car loans are typically 3, 5, or 7-year loans, whereas this is a 30-year, so it creates a lot of cash flow. So people will take cash out to pay off debts, whether it's to save interest or to create cash flow. That's a good reason why, or just to simplify their life. Those are all really good reasons. Other folks might take cash out because they need cash for some reason, whether it's to pay, school tuition, whether it's private school or college. Maybe it's to start a business. Maybe it's to help out a family member do something else. There's a lot of reasons why people just may need cash, right? The other could be home improvements. They want to do some stuff around the house. There are home improvement loans, so check those out. But let's say they want to put paint, landscape, do some other stuff that doesn't get you a whole lot of quote value, because landscaping and painting doesn't, but man, it can get expensive. Maybe they want to go on a vacation. I don't necessarily totally recommend doing that, but maybe they want to. So again, there's reasons for the cash outs. It could be just taking the cash, the home improvements, things like that. And then some, few and far between, but it can happen. Unfortunately, people need cash to pay off a homeowner that is leaving, whether that's an ex-spouse, whether somebody wasn't legally married, but they were joint, they need to pay off the cash. Those can be called ulti liens. So if you do know somebody that's getting divorced, this is a good option that they can look at, to where it's like if somebody wants to keep the house, it's a way to refinance and get the spouse off, as well as give them their half the equity. So there are a lot of good reasons to do a cash out. As far as when to do like a first lien, like you redo the whole thing, get one mortgage, or whether you do a second mortgage, because maybe you don't touch the first one. The first one's there is great and wonderful and beautiful. And then you go get a second one. And there's reasons why you would and wouldn't do both. Again, there's a whole another section about that here, but those are the reasons. Those are the things that would qualify something as a cash out. Again, paying off things like, just anything random, even IRS debt, right? That's a cash out. That's a good reason. So anything that's just going to take money out to pay for stuff, that's when it becomes a home equity loan or a cash out. If you have any questions or want to talk more about it, certainly call us, but cash out loans do have limitations as far as how much you can borrow, like all loans, loan to value, but they're typically lower than that of normal refinances. Your rate's probably going to be just a touch higher because the industry sees cash outs as a extra added level of just risk because somebody's taking money out as opposed to using their own. And again, in general, it's kind of similar underwriting guidelines. Again, when it's Texas A6, there's extra stuff. But if you have questions about your specific scenario or you want to talk about one, the Mortgage Mark team is certainly here to help. And as always, we appreciate you watching. And when you think mortgage, think Mark.